Most residential real estate transactions today involve a mortgage. It involves a buyer or a couple buyers going and securing financing for the purchase of the home. Understanding that process and understanding the different costs that go into it is important for not only the agent, but it's really important for the buyers. So let's take a look at how this agent walks her buyers through a process for mortgage financing.
Remember when I mentioned the finances earlier? Well, let's go ahead and talk about the mortgage terms. You'll want to know what kind of mortgage terms work for you because that will go into your offer. Different types of mortgages have different down payment requirements, interest rates, and terms, which are the number of years.
Okay.
We know exactly what we want to spend per month, and the house that we want has that agreed upon monthly payment.
Okay, great. Well, keep in mind that your monthly payment is going to be much more than just the loan. It's going to include things like your interest, your taxes, and your insurance.
We knew about the interest, but we didn't think about the taxes or the insurance.
Sure. Well, that payment is commonly called PITI, which is going to be your principal, your taxes, interest, and insurance. The property taxes for the year and your homeowner's insurance are typically escrowed into your monthly payment.
Well, we're going to need to discuss this because we didn't include any of that in our
Sure. You'll definitely,
planning.
yeah, you'll want to go to your lender and make sure you discuss that with them. They should be able to help with that as well.
Okay.
It would also be smart at that time to consider your monthly budget for things like utilities, trash removal, routine maintenance, repairs. As first-time owners, these are going to be new expenses for you.
Yeah, I hadn't even considered that.
Yeah.
Well, we know someone at our local bank that we can talk to. I think they would be able to help us out with some of these expenses.
Sure, no, that's great. Keep in mind that you'll also want to know your credit score. If you have any debts like car payments or student loan payments, those can affect the amount that you qualify for. Your lender, again, can help you with all of these and how they will directly affect you. But it's good that we're having this conversation so you know what to expect.
Yeah.
Yes, we appreciate it. Do you think that the credit and debt will affect being able to be approved?
Well, typically lenders will look at two different ratios, one being the debt to income, which is how much you owe in car payments, student loans, plus your PITI versus your income. The second is going to be your housing expense ratio, which is the PITI versus your income. They have certain thresholds of each of these, and again, you can discuss this with your lender to understand specifically how they apply to you.
Okay, thank you for that information. We should really talk to the lender about this and figure it out so we can move forward.
I agree.
Yeah, definitely. Have your lender give me a call if they have any question or concerns. We'll be able to make our offer once we know what type of loan you'll be using.
Okay,
Great.
thank you.
Excellent.
So this agent is working with her buyers to give them as much information as she's comfortable giving about the mortgage financing process. You see, there are many different programs depending on what city, state, region you're in, and there's all different types of programs depending on what kind of financing you're getting. If it's conventional, FHA, VA, it's very hard to be a real estate expert and a mortgage expert at the same time. So when you watch this video, you saw the agent was giving as much information that she was comfortable giving, but then clearly guiding her clients to talk to the mortgage originator, talk to the lender about the specifics for the program. And that's perfectly okay to do. The thing you have to understand as an agent is that some people, right, may qualify for a number way bigger than they could actually almost afford on a monthly basis. So what you find is, and as this agent talked to these clients, she said, listen, not only is there principal, interest, taxes, and insurance, but there's also, trash and water and sewer and maybe there's an association fee on top, and there's maintenance of your home. You got to have a little bit stored up for deferred maintenance. And so what happens is the real picture of what it costs to own a home sometimes is a lot bigger than just the mortgage payment. Helping your clients understand that will go a long way to creating a relationship of trust where they can be successful. Maybe like this couple, it's their first home, and it's their trust in you that you set them up for success, knowing that maybe they qualified for a much more expensive home, but you showed them one that they can make the payments carefully in and comfortably in. Then maybe they come back and purchase from you in their next one as they move up through the buying cycle of a homeowner.